Welcome back to Mentor Nation, the podcast for entrepreneurs looking for real mentorship, real strategies, and real stories so that you can go out and build your dreams. I'm your host, John Abbas, and it's time for another episode, so buckle your seatbelt and let's go. Hey everyone, welcome back to another episode of the Mentor Nation podcast. It's John Abbas here, and before we bring today's guest on, I wanted to share something really important with you. Because if you've been listening to the podcast lately, you'll probably have noticed that lately I've been finding guests that I believe can add tremendous value just while we're facing the fallout from the coronavirus. The last few episodes have been focused on just having different experts on, from things like having more intimacy in your relationships because obviously you're spending more time at home with the people that you care about. Things like investing in stocks and real estate because there's just a lot of opportunities coming and will be coming in the future. And I want you all to know that I've been doing this on purpose because when this passes, I feel like the world will most likely be much different. But there's going to be so many opportunities out there for those that are prepared and looking. I mean, every guest I have, the most successful people that I know, they all believe this. And I just truly believe personally that we are in a window of time where the entrepreneurs or the people that are vigilant, able to adapt, and just have enough awareness to pay attention on how you can best serve others with your unique skills and abilities are just going to win big in the next 5 to 10 years. I have interviewed so many people on this show that have lost it all in the recession that we faced 10, 11 years ago, only to build it back 10 times bigger and better today. And here's the crazy thing. They all say the same thing, including myself. I lost everything, 11 years ago when the economy tanked. And they all say the same thing. The downtimes will teach you more than any other time if you could just keep a strong mindset and just be willing to adapt and work hard. Now, today in this episode, I get the opportunity to interview Kenneth Amaduri. He is the founder and editor of Crush the Street, which is a really highly popular financial newsletter that specializes in educating people on investing, market trends, and just where smart people are putting their money and what they're doing, especially in a time like this. His YouTube channel has tens of thousands of followers, and he interviews some of the smartest people on the planet on growing wealth in a variety of ways, such as stocks, precious metals, and cryptocurrency. So in this interview, Kenneth and I speak a lot on just his view of the economy, what is likely to happen post-coronavirus, as well as where he feels the biggest opportunities lie in the future. Now, pay attention to this because since his team researches this stuff all day, every day, and he interviews the most credible experts on his show, I just know you're going to gather a lot of insight from this interview if you pay attention. Now, before I bring Kenneth on, just remember, if you have not visited our new website and downloaded the free blueprint I created, make sure you do that. The title of the blueprint is How to Get Millionaires to Mentor You. And in that blueprint, I list every strategy I use to book the guests on the show, as well as the tips that I use to network with ultra successful people and get them to mentor me personally. Go to mentornationpodcast.com, click free blueprint, and there it is. Now, without further ado, please help me welcome Kenneth to the show. All right, Kenneth, thank you so much for being on the Mentor Nation podcast. It is an absolute pleasure to have you on.
Hello, John. Thanks for having me.
Yeah, absolutely. So just so the audience has a better idea of you and what you've built, I just want to let them know, you're the co-founder and the host of the Crush the Street brand, which is a highly successful newsletter. It's a YouTube channel with tens and tens of thousands of followers. And it's exciting because every week you interview some of the smartest people in the world and the biggest authorities on money, economics, and also, alternative investments such as stocks and cryptocurrency and precious metals. And so I'm just really excited to have you on today. But my hope is that we can kind of break this interview into two parts. Part one is just some insight on the economy, the recovery moving forward, just based on, the information that you have gathered from talking with some of the brightest minds on the subject. What do you think the rest of 2020 is going to look like realistically based on current information? And then part two, I was hoping we could spend a little bit of time talking about just how can people position themselves to win financially moving forward? Where smart people putting their money, why, what advice would you give to people who just don't want to sit by and twiddle their thumbs for the next 6 months, but would rather just capitalize on this moment in history and set them and their families up to win? And so I know it's asking a lot, but before we get into all of that, I honestly would really love to hear a little bit about your story and how you got started as an entrepreneur, how you created success for yourself, and how that led you to create Crush the Street.
Well, as far as myself, I graduated, as I was telling you before the interview here, into the '08 crisis. In high school, I was always interested in entrepreneurship, going around with realtors, watching people make money during the whole boom in the early 2000s in real estate. And I was committed. I mean, I really had it in me. I didn't really have an upbringing where, we weren't poor, but we were middle class, and my parents, had to say no to me here and there, and they were just frugal. They fortunately have a savings right now, but I wasn't just handed everything. And part of that is my mom is from Argentina, and she grew up very poor. She's seen hyperinflation. She's seen the government really screw the people, freeze the currency. She's had checks, and by the time she's gone to deposit the checks are basically worthless. So she's really seen that. My grandfather died with cash under his mattress. So there was always this concern in terms of trust of the government. And the more and more we have these booms and busts, the more people are questioning the system. And I think the '08 crisis was a speed bump to the greater crisis that, maybe we're in or maybe we're going to have. I mean, consider where interest rates were in '08 and where we are now in this crisis, and how much stimulus was being done in '08 and how much stimulus is being done now. I mean, can you imagine if they're able to paper over this current crisis with, trillions and trillions of dollars, what the next crisis is going to be like in 5 to 10 years? What's that going to look like? What's the Fed going to be doing in that moment? And all of that leads to currency destruction, a dollar issue. And so you need to be really thinking about what you are going to position yourself in that's going to protect yourself against a failing currency. And especially for people around the world, because the US is exporting inflation at rapid rates. It's possible we continue to see a stronger dollar here for the near to midterm because the whole world is acting in unison with the US and printing, and still considers the US as the safe haven. And because of that, and to that extent, I don't think we're going to see hyperinflation in short order here like many are thinking. I think we're going to see it trickle into things like stocks once again. I think we're going to see it trickle into real estate, the cost of living, and that separation of the rich and the poor is going to be greater. You can just see what's happening. The reaction to this pandemic, the rapid pace that it all took place in was just absolutely historical when you think about what has taken place. So you really have to ask yourself, what is going to happen in the short term here? And there's a few things that you have to consider. Number one is the economy doesn't equal the stock market. So even though on paper, stocks should go to Dow Jones 5,000, Dow Jones 10,000, with Delta, having all this massive fleet just parked. What's going on in oil, negative oil prices. I mean, all of these things need to be questioned as to what is going on in the underlying economy. So on paper, we should see stocks crash, which will likely happen. We'll see these moves down. But you have to anticipate the Federal Reserve and the government stepping in with massive programs, increasingly massive programs. And to that extent, I think that to a degree, stocks will hold up and ultimately go up in dollar terms. I believe that will happen despite the volatility. I'm sure we'll kind of get into how to play this here down the road in this interview, but it just going into my early working years, I experienced the failure of the '08 crisis, and it led me to sound money. It led me to cryptocurrency. It led me to, investing in stocks. It led me to cash flow and having resilience in the economy, because I saw my father lose his job and question the system. And, having these experiences gives you that sort of caution when it comes to just trusting the boom. And my goodness, what a change we saw from February of 2020 to where we are now. I mean, the fastest contraction, ever. I mean, we had 30 million jobs lost, people filing for unemployment in a rapid amount of time. So things can turn on a dime, but I'll pass it back to you, John. I don't want to keep rambling too much.
Yeah, no, I love this. I mean, this is what it's all about, right? Is just your insight, what you're seeing. So when you learned from the '08 crisis, what did you start with? Like, what was your first entrepreneurial endeavor? Like, how did you get your start in cash flow? And how soon did you start diversifying versus just like focusing on one thing and building it out?
Well, I think it was a combination of multiple things. I was buying precious metals. I made my first massive purchase of silver back in that time. And I think that was probably my first transaction that I did. I made some mistakes. I took out a credit card, right out of college, and bought some, mining stocks and stuff that were a little more speculative with some debt. And that was a learning experience for me. I thought it was a sure bet, and it wasn't. But those failures led me down a road of prudence and learning, and I'm grateful for that. Yeah, it was about 2011, I started acquiring some property, and I got them at great prices, because that was really before we started to see a recovery in the housing prices.
Yeah. So I was now, where was this? I'm sorry, what city?
I was living in California at the time. And so we saw the big, massive boom and bust. And, fortunately, I was able to purchase my properties before, it boomed again. So to the degree that I got a good value, as it was very, it was a deflationary environment in terms of the price of homes, I'm grateful for that. I know California is crazy when it comes to politics and, a lot of their financials, but the things that it does have going for it is finite real estate in, great locations, weather-wise, beauty, natural surroundings. I mean, those are things that you can't replace. And, I live here in Texas, and it's a beautiful, amazing place, but there's not much difference between Austin and going 100 miles outside of Austin. You still have the same landscape, the same scenery, the same everything. It's not like, the California coast, where you have a finite strip of coastline and then really nice weather until it starts getting, into the Palm Springs desert weather, right? The Arizona weather. So, I mean, there's certain things that I like about California. I then went into Memphis, Tennessee, where I had opportunities to get some great cash flowing rentals. And that's been a great source of income for me. And surprising to me, Memphis has been a great place in the sense that there's a lot of essential, quote unquote, essential jobs there. Something I would have never have guessed prior to this pandemic. But there's just
like
a lot
FedEx?
of manufacturing. Yeah, FedEx and things like that. The economy has a lot of essential jobs there. And when I was talking to the property managers, they're like, yeah, we're only down a fraction for our April rent, when we were, could have been expecting a lot more. But considering a lot of the jobs were essential, The real estate and the cash flow is held up pretty good there. I own some Texas real estate. I own some Florida real estate as well. And yeah, I mean, I got into stocks and, cryptocurrency was a big thing for me. I got a little bit in 2013, but really positioned well in 2016 into the 2017 boom. And then, here we are once again approaching the halving. Pretty excited about what's going on.
Yeah, and I'm excited for you to talk a little bit about that here in just a minute. So how did that lead to Crush the Street? And if you could just explain a little bit about exactly, what your newsletter, what your YouTube channel is all about, and then we'll dive right into the topics.
Well, it was an opportunity for me to share my experience, share my investing experience with people and then start interviewing people. It was really birthed in the early days of YouTube when not a lot of people were doing this. I mean, there's a lot more competition nowadays of people on the YouTube channel. This was before MSNBC and CNBC and all these major news outlets were on YouTube. It was just, guys like mostly people with their cats and different things like that. But, YouTube was where my partner and I got our start. And we were talking about the '08 crisis right when it was about to start, talking about Lehman Brothers crashing. And then as soon as that started happening, we were getting a lot of attention to our YouTube channels. And then we were able to kind of point people into the direction of our websites and educate people. And this was an opportunity to just share our journey. We're not financial advisors, but we see things differently than what you'll hear on the mainstream media. And that's, I think, important because, we've been talking about this bubble that we're seeing. It's shocking to people who've been listening to CNBC to see that we're in this massive correction. The economy's at a massive grind and, negative oil and debt problems, liquidity problems. But, we've been talking about this stuff because we're unfiltered, unfettered, and, we don't have a higher authority in a sense to appease. So these people, by the way, I don't think are ignorant. I don't think the people on CNBC are ignorant. I don't think the people on in the Fed are ignorant. Jim Cramer, I think they're just unable to freely analyze the markets. And to that degree, they're left to play the hands they're dealt with and manage the optics and present the information as such. And, I don't have to do that with Crush the Street. So I'm very grateful for that. And I get to interview some of the smartest minds in finance.
That's really, really awesome. And I agree with you 100%. I think you're right when you say a lot of the big names in the investing world, they have a framework within that they have to operate. And so they can't do what like Elon Musk seems to be doing on Twitter lately, which is just say whatever is on your mind, which is great, right? Like
he's a pariah now, right?
That's exactly right. The coronavirus is stupid. Like I love like reading some of his stuff. So first I wanted to ask you, obviously nobody knows for sure what's going to happen to the extent of, will there be a resurgence? But from what you're seeing right now, like what do you think the rest of 2020 is going to look like? And what I mean by that is, you have people that are so divided, right? Like you have people on one end of the spectrum that are just doomsdayers. They're like, everything's going to crash, fall apart. We were due for a recession anyway. And it's just like, it's just bad. And then on the other half, you have the people that are like, well, the stock market's still held up. Real estate prices are still holding strong in many different markets. So like, what's your take on the rest of 2020?
Right. Well, it's a nuanced situation, a lot to absorb and take in. And, to a degree, we're seeing the crash. I mean, this is, we're witnessing the headlines that were conspiracies to talk about a few months ago. This unemployment that we're seeing is records. But the thing about it is, I don't think we're really feeling the depression yet because of the Band-Aids that have been put on to the system. You got to remember, there's a lot of people on the lower end of the earnings spectrum that are actually doing arguably better than they were prior to February. They just got a $1,200 check. If they're a family with a couple kids, they may have gotten, over $3,000 maybe close to $3,000, $1,200 a person plus, $500 a kid. They might be doing okay with that. If they lost their job, every state has their metric for calculating unemployment, but everyone's getting a flat $600 bonus,
Right.
Plus to that. So that's a huge payday. A lot of people are noticing that these, workers, they don't want to go back to work, and I've talked to people, I've witnessed small businesses who, they lay someone off and they're just like, okay, well, I'm going to ride this train. And there was probably some misaligned incentives on that. They probably shouldn't be paying people more on unemployment that they were making at their job.
Absolutely.
Just to, allow people, at least to give them some sort of fire to go back to work. But I know they were trying to push something through. So to the degree that this depression is being delayed, I think that's what we're seeing. People are able to inch along with their rent and mortgage payments because of all of this. The liquidity that's being injected into the system is sustaining companies and these paycheck protection programs. All of this stuff is debt, inflationary. There's an equal and opposite consequence on the back end. And again, just adding momentum to this Ponzi scheme. And ultimately, it is a Ponzi scheme. But does it end this year? And I'm not necessarily sure that's what happens.
Right.
We know ultimately this can't go on forever. I tend to think that we're going to hear Donald Trump or someone come out and say, we're going to implement the US's largest spending program, infrastructure spending program, to get all these people back to work. And again, it's going to be more debt, more leverage, and just adding to that crisis on the back end, the bubble, reinflating the bubble. And it's possible that the ultimate end is hyperinflation, and I just don't see that happening right away. I see them papering over this, in the short term here. And to that degree, you want to own things that are finite and things that will go up in dollar terms. And, a lot of people don't want to hear this because they want to hear me say stocks are going to 5,000, Dow Jones 5,000, Dow Jones 10,000.
Right.
And I think you can see maybe a quick fall. We're going to see those quick falls, this recession. But I tend to think that over time, stocks will hold up in dollar terms because of all of this going to happen. That's going to trickle somewhere.
Right.
The higher end spectrum didn't necessarily get a $1,200 check, but they have their assets being propped up by the government, which could mean a lot more than a $1,200 check, right? The real estate that people own, the businesses, the stocks, all of this stuff is getting propped up by this, CARES package and this Federal Reserve stimulus money. So this is all that needs to be considered. It's very nuanced. I wouldn't be jumping into everything at the moment, but you have to consider that, there's going to be a lot of support in this system that will ultimately hurt the dollar. That's where this all leads. It hurts the dollar.
Now, when you say it hurts the dollar, are you talking about how much you'll be able to buy with that dollar in other countries, in our own country, both? What do you just in layman's terms for the people listening, what are the effects of or the repercussions of the dollar being hurt?
So I tend to think that other countries are going to be hurt to a larger degree because the world sees the U.S. as a safe haven.
Yep.
Europe is dealing with a lot of issues and a lot of their problems are coming to fruition. And so the worse Europe does, the better we look in comparison as far as the U.S. goes. China, with this coronavirus, people like it or not, they're going to be hurt deeply, for years to come, in terms of optics, in terms of trust, in terms of investment.
That's right.
For many years to come because of this coronavirus. And so they're going to deal with a lot of recklessness in their government to sustain their economy as well. So in terms of the world, I think the U.S. is going to hold up. And I just believe that in terms of real things like gold, like products, like real estate, finite assets, even stocks, even companies that aren't going to go anywhere, these are going to hold up. And that's what happens when you have a deteriorating dollar. It buys less of those things. So if you believe that, you have to believe gold is going to go up. You have to believe silver is going to go up. You have to believe homes are going to go up. You have to believe, your groceries are going to go up. All of these things. And, if you also can take into consideration back in the '08 crisis, there was a big halt on construction. The demand for homes, there was a big halt on those. On the homes, there was a disruption in the construction of homes. So because of that, I don't know if we're going to see as big of a real estate crash as we did in the '08 crisis. I tend to think it's almost going to be artificially sustained. I do believe there is going to be a pullback, a correction, because people are going to simply default over time.
Yep.
But, that has to happen. But because of, more of a shortage of supply, and I think the Fed's going to do everything and anything they can to support this. As Neil Kashkari has said, they're going to overreact in this environment. And because of that, I believe we won't necessarily see a crash as big as we saw in the '08 crisis in dollar terms. Now, pain, all of inflation, all of these things, that's where this is going to fall.
Gotcha. Now, and I really appreciate that insight, because I just know a lot of people are wondering, they're getting their content, their information from everywhere, and it's so filtered. And so it's really good to hear your take, because you can speak freely with having, just a really good amount of information based on the people that you know. Now, the last part of this, I really want to spend talking about, how can people position themselves to capitalize? Because I know a lot of, especially people listening to this podcast, they're antsy. They want to capitalize. They just don't know how. Like, do I buy stocks? Do I invest in real estate? Do I wait for real estate? What about precious metals? So I want to get and especially also cryptocurrency. And I know obviously that could be a whole podcast interview talking about what it is. And I hope we could just do a high level on it. But, for somebody that does not want to stand idle in the next 6 to 12 months, like, how can people position themselves? Where can they put their money? What are some of the investments that you really believe in that have earned you really high returns? And what advice would you give them?
Yeah, I mean, definitely a lot to unpack. And one thing I want to put out there to people and pose to people is, back in January and February, into the 2019 year, watching stocks go up all the time, seeing this great economy go on around, and people getting higher wages, all these things that were taking place. Now with the stock market extremely volatile, people losing their jobs, how does it feel? How do people feel right now? People are scared, right? Just staying afloat, treading water is a win for a lot of people, while a lot of people are losing their jobs. Just maintaining their job, just maintaining their wealth right now is a good thing. I think a lot of people would agree with that. And so I think going from that extreme, optimism to this extreme bearishness, you need to put your investments into perspective and say, okay, how am I going to play this over the next 5 to 10 years?
Right.
And so in this environment where things are extremely volatile, cash is king to deploy. And so there's going to be a lot of defaults as this depression flushes through. People will lose their homes. Companies are going to go bankrupt. And, as what's going to throw things off, of course, is the injection of capital.
Right.
So we're going to have to deal with that, as the government keeps things artificially sustained. But in this environment, cash will be king to take advantage. And it's going to take, a year to 18 months to completely flush through this. People aren't going to start losing their homes for a while.
That's right.
Renters, losing their jobs. A lot of things have been delayed. And so that needs to settle in. That needs to flush through. So, And you don't want all dollars. So I used the word cash. And I just put out an article on my website this morning talking about how I believe a cash position is partially cash, US dollars, and gold. Yep. In this environment, gold is a beautiful thing. It's highly liquid. It's held up under this crash, very, very well. We're continuing to see people pile into gold. Governments around the world are going into gold. And when you have nowhere else to get a real return, gold is a great place to be. Now, obviously at $1,200 gold, it was arithmetically better than, $1,700 gold, but it's still a great place to be. And we know there's going to be trillions of dollars more. This is not the end. I'm telling you, we're going to probably see a massive infrastructure spending program, and we're going to see the Fed's balance sheet go to 10 and $15 trillion. And to that degree, I think gold is going to be a great place to have deployable cash.
Now, I'm sorry to interrupt.
No.
I was going to ask you just while it was on my mind. Now, when you say gold, do you mean investing into gold stocks, buying actual gold that you can store at home, or a company hold it for you? Like, if somebody were to invest in gold, what would you recommend the best way to do that?
Well, as far as a cash position, I would not consider my cash positions, anything in the gold sector specifically when it comes to mining stocks. That's more of an investment. Things that could go up and down, likely up in this environment with all that's going on. I mean, I think it's a great place to put that. But when it comes to cash, you want something that retains its purchasing power. Notice I didn't say cryptocurrency when it comes to cash, because I do believe that that's a volatile portion of the portfolio with a lot of potential, a lot of upside potential. Now, if you have the means to not need a lot of cash, you can have more of your portfolio allocated towards more high risk asymmetric returns, such as Bitcoin, such as the gold sector, silver sector. Silver hasn't moved nearly as much as it should have, which means that I believe that there's a lot more upside to come here. So definitely consider spreading your investments across. But as far as cash goes, gold's a great place to own physically. If you don't own any physically, I would consider starting there. Also get like the Sprott ETFs. Those are great physical type ETFs. They're not, unallocated, and, ETFs that say they have gold but don't really have it. It's not trading an unallocated futures contract, one of those types of things. This is a great place to have cash and consider as cash for your reserves. Got it.
Now, I want to spend just a few minutes because you touched on cryptocurrency, and I know a lot of people, everybody's aware of it, but very few people know even how to explain what it is. You have like half the planet that thinks it's like monopoly money, but the other half, they really believe in a decentralized currency that a government is not controlling. So what is your stance on cryptocurrency? And out of the, thousands of tokens that are available, like what should people be looking at if they want to put a little bit of their or just money in general into crypto?
Yeah, absolutely. Well, it's a beautiful thing that was created in, out of the '08 crisis, right? It was a response to where things are going, this cashless society. And the more things get out of control, the more governments are going to do, and the more extreme they're going to get to keep people in dollars, to keep people in government currencies. And, especially when we go cashless, how easy will it be to track and trace and to keep people from moving their money out of government currencies? Because that's a problem for them. They don't want people to opt out of the system. And, Bitcoin gives people a way to opt out of the system. And the crazier things get, the more people will try to do that. The more people will try to go into gold. The more people will try to go into cryptocurrency. And the beautiful thing about something like Bitcoin is it is not controlled by anyone. It's decentralized. It's miners. It's people that get together and say, we are going to agree on this network. And I love the analogy. It's basically like Visa, the properties of Visa, the network of Visa, and gold combined. The sound money principles of gold plus the ledger, the trust in the transaction network combined into one. Bitcoin is the network. It is the money. And that's what's really cool about it. If you wanted to sell your house in the US and then show up in France, you can transfer that wealth on your phone or, in your mind with your key. And that's what's really powerful about it. And it's hard to explain to someone who lives in, New York City or Florida who has not seen a lot of volatility in the US dollar. But I mean, look at people in Venezuela or, some of these other countries who can't move their money, who are locked in and watching their purchasing power collapse. This is a beautiful thing for them. And it's an opportunity. And again, seeing what we're seeing in governments now, I don't think it's out of the question to see some pretty draconian things take place and to see some crazy things happen with our currency, with our devaluation of the dollar. I mean, look what happened in oil. I think that should be a sign that, hey, the markets could break down. And so, watching what's taken place, you want to consider things that are outside of the system. And with Bitcoin, the longer it's around, the more it continues to prove itself as a viable alternative. And that's what's really powerful about it. I'm not too much into all of the different altcoins. I do own some Ethereum. I own some Litecoin, even though I'm less and less interested in Litecoin. Its role in the community is dwindling, in my opinion, especially as Bitcoin moves. Litecoin lags its move, which again, what's the point, right? These altcoins are supposed to be leveraged positions to Bitcoin price. If it doesn't even do that, you might as well just own Bitcoin. That's kind of where I'm at with it. I think the more they crack down on cash, the more things get out of control, the more socialism gets implemented across the US, the more people are going to seek freedom and alternatives to be their own bank, to be autonomous, and Bitcoin affords them that.
That's awesome. Now, because I know a lot of people listening they're going to be very curious, especially after this interview. Do you have a particular video on your YouTube channel that explains more detail about Bitcoin and cryptocurrency?
You know what? Man, I've interviewed so many people on it. We created Banker's Worst Fear, which I can send to you, which was something that we wrote and produced in 2013, I believe. And that was Bitcoin back in the day when we first started covering it. And I'll definitely have to send that to you. Maybe we can include it in the links here.
Yeah, absolutely. I'd happy to put it in the show notes.
Yeah, that would be really cool. But I've interviewed guys like Jimmy Song, Trace Mayer, who's covered so many. I just don't think there's one specific one where we've covered Bitcoin and said, hey, this is the one. Though I apologize.
Yeah, no, that's totally fine. I just, I think there's only 21 million coins. Is that correct? That will ever be mined of Bitcoin.
Oh yeah. There's only 21 million. We got the halving coming up. So, there was only going to be 6.5 coins mined every 10 minutes. So, I mean, this quantitative hardening that takes place is going to create an opportunity where, the currency goes up in value because there's less of it. And the more dollars there are, the less crypto there are. I mean, that's a great recipe for people that hold it. Now, the ultimate risk is that people don't see any value in it and they dump it because in that sense, in theory, it could go to zero. But that could also happen to gold. I mean, in theory. But, I'm willing to bet and put my wealth into something that I believe is proving itself. I think, Bitcoin can go to $1 trillion market cap and beyond. Governments might start using it, secretly because they're not going to want to for optics purposes, say they're putting their money into Bitcoin because that's an opt out of the system. But out of utility, I think certain governments might start to do that. And when you have this recipe of converging events, really extremes, booms and busts, something like Bitcoin is going to really benefit people. And again, I'm very curious to see what's going to happen after the halving. This is an important moment. If it's going to, keep going up into the halving, or, if it'll be a buy the rumor, sell the news type of thing. I think some of this might be getting priced in, unfortunately. But over time, just as the chips start to settle, it's going to have to trend higher. I don't believe people are going to be opting out of this. So to that extent, I'm very bullish on it. I'm a permabull. I think we're going to 20,000, 50,000. I mean, 50,000 is kind of my target here for the next couple of years.
That's awesome. That's awesome. And there's lots of resources out there where people can learn more about crypto, Bitcoin, the halving that's coming up here pretty soon, and what that actually means. I wish we had the time to cover all of that. Now, for somebody that is listening in that has some cash, do you recommend they deploy now? Do they wait? I feel like so many people are in this little bit of limbo right now. They're like, well, I don't want to invest in anything because I feel like there's going to be a big correction coming, but I don't want to miss out either. What do you think, just based on personal opinion, somebody sitting, maybe they have $10, $15, $25,000 just sitting around and they want to deploy it somewhere. What would you do if it were you?
Sure. The first thing that people need to do is manage their expectations and say, they can't expect to catch the bottom, catch the top, and, deploy and then, hit a home run, because
Right.
That's what everyone wants to do. Everyone wants to catch the perfect bottom, sell at the top, and have these moments where, they feel like they perfectly time the markets. So, to that extent, they need to let that go a little bit and look for opportunities. So understand that this depression is going to take some time. So opportunities to buy are going to present themselves over the next 18 months. So if you see an opportunity tomorrow, act on it. I think Bitcoin is a great opportunity still because it's under $10,000. I think we're going to 50,000 plus. So, anything under that is a buy, in my opinion. I would recommend accumulating sooner rather than later. I think precious metals are a good thing to be looking at now. I think the stock market is going to be volatile. And to that extent, I would wait before buying any more stocks, especially after this massive, I'm going to call it a false fake rally that we've seen. Yep. I think we're going to see some downtrends in stocks here. But if we do see some pretty big moves down, consider buying some of the big names. I'm not going to tell you that Disney's not going to be around in 20 or 30 years. I don't think, Disney's going away. Coca-Cola, McDonald's. I mean, these are massive corporations. And, we actually have a shopping list on our website, where we have stocks to watch, when they do go on sale. Because over time, I think that the money printing is going to trickle its way back into these stocks, and that's where you're going to want to be to capitalize on this. So, yeah, that's kind of how I would play it, but don't be too emotional when it comes to investing and having to, go and deploy your money tomorrow. Right. Because look at Warren Buffett. I mean, the smartest investor in the world has been sitting on cash for long time. And look at him. He got burned. He bought Delta Airlines in February thinking that he was catching a dip, kind of got too excited about it. And then sure enough, this was a deeper, longer depression for airline companies than he thought. And he sold it at a loss, and he admitted it. So, it should be a lesson to people that what we're dealing with right now is nothing to act irrationally or very, very quick in.
Man, I love that. You have literally just covered so many incredible things. You've given so much wisdom in 45 minutes, and I know people are going to want more. What is the best way that people can connect with you, follow your work, and really just, get access to your content as it becomes available?
Well, they can sign up for my free newsletter at crushthestreet.com. We publish regular weekly articles there. I have a number of contributors that post on a regular basis. And then you can also get my interviews there as well. I interview other people in the sector, and we're going to be covering the crypto, the Bitcoin halving coming up quite a bit, and just kind of keeping on top of this this recession, this flushing through of the economy here. So if you want to stay up to date on that, visit crushthestreet.com. You can sign up for free there. But thanks for the opportunity to share that information, that shameless plug.
Yeah, no, absolutely. I absolutely hope to have you on the podcast again, just because there's just so many directions that we can take this. But I just want to say thank you, Kenneth, for your time. This was a fantastic interview, and we just really appreciate you.
Thank you so much. Appreciate that.
Yes, sir. All right, everyone. I hope you gathered some incredible insights in that interview. I know Kenneth did just a fantastic job. Make sure you visit crushthestreet.com and subscribe, as well as visit his popular YouTube channel and just check it out and learn some things. As we wrap up, I want you all to remember something. I want to tell you a really quick story. Opportunities are everywhere if you train yourself to look for them. And this is something that my mentor had taught me a long time ago. And he said that to me. He said, John, opportunities are all around you. It's just to 99% of the people, they're not trained to look for them. He's like, to 99% of people, they'll be driving down a road and they'll see this nasty, rundown, beat up home. And they'll think to themselves like, wow, what a trashy place. That's disgusting. That's gross. But to the right person, that same home is an opportunity to turn something broken into a masterpiece. Guys, you all have the ability to create masterpieces in your own life. And my hope is that you do exactly that by growing your mind and growing your skills and working hard. If you enjoyed this episode, please subscribe, leave us a review. And guys, I cannot wait to see you next week with another awesome interview. Take care, everyone. Have a great week.